Hi, good morning, good day, wherever you are. Welcome to our global webinar series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side already answered in our webinar. Our goal is every day the same, so let's have a nice and quick start. Like every day, quick and smart, 15 to 20 minutes, and today it's Friday, 2nd of November 2018. We will start like every day with our risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you are in the European Union, the topic of the year is that there are different offers and options for retail clients and professional clients. Sometimes a picture shows more than 1,000 words. The margin requirements is quite different depending on your leverage, 500 or 20 or 30. A picture shows more than 1,000 words. DAX 30 and euro dollar, you see the quite different margin requirements. If you are a high professional trader and you believe you want to get the professional client status, you can apply for it if you meet the criteria. Retail clients will have a benefit in the European Union and unlimited protection against negative balances. Professional clients don't have that, but some brokers and of course Admiral Markets too will offer a negative balance protection policy. That's how we call it. And there you will get a protection up to 50,000 British pounds, what is around about 70,000 euro. Only for the European Union. Important. If you'd like to check it out, go to admiralmarkets.com and here you see the specific link displayed. This is me. My name is Jens. I'm the German guy from Admiral Markets. We are a big international Forex and CFD broker. We have over 18 country offices, but I'm not the main speaker. The main speaker is the day trader of today. On Monday, it's Jay's Day. On Tuesday, it's Paul's Day. On Wednesday, it's Giancarlo's Day. On Thursday, it's Marco's Day. And on Friday, it's Dirk's Day. Our leading day traders live every business day, every trading day to the same time. And it doesn't matter if you're a retail client or professional client or wherever you are, anybody gets the same spreads. For example, DAX 30 or euro dollar, typical spread of just 0.8 pips or points during main trading hours without additional commission. Check it out on admiralmarkets.com, for example. And like said, one world, global offer. You can check out what is our offer in Australia or in the European Union, or also what is our activity in Chile, a global broker, global offers for you. Enough from my side. Now it's time for Dirk. Good morning, good day, Dirk. What's your view to the markets today?
Yes, good morning, Jens. Good morning, guys. Let's transmit the screen and we'll just start into, let's hope, really prosperous Friday. Before we get started with some technicals, of course, you gotta need some fundamentals for the day. So we have 13:30. And just remind yourself that Frankfurt and New York, for example, are just 5 hours of difference until they change time as well. So 13:30 is NFP time today. So the non-farm payrolls, the US labor data is about to come and to be published for the month of October. So that's going to be a rock and roll at around this time. Important, of course, not only for the US markets, but of course for the DAX and a couple of currency and other stuff as well. Before we get into more details, just check out the calendar for next week because it is a very interesting week to come. Besides the fact, for example, for the German DAX, 9 companies are about to report their quarterly earnings. So that's quite important for the German DAX. And of course, the major topic next week will be the midterm elections. So don't forget about that, because it's, let's say, steering and guiding the market the whole time. And if there is something like an outcome that maybe the Democrats are able to regain the majority for one house, so that might be getting and leading to a bit of trouble for the markets as well. So elections, again, very important to say. Watch the calendar on Wednesday. You got the FOMC, so the Federal Open Market Committee is deciding about the target rate, about the Fed funds rate. And right now, of course, you can imagine around that midterm elections, and besides the fact that a couple of guys out there already know that there might be some decision, more major or more important decision in direction December, there won't be any changes. So you can imagine around an election and around topics like that they might not change anything. Interesting to say is what the monetary policy statement will tell us, or will give us a little bit more details about where the road is going to be hit. And that's the point at Wednesday at 20 CT. Okay, so that's the thing from the fundamentals, from the calendar, let's say, from the economic calendars. Things we know so far. Things we don't know about the calendars and about the facts which are coming just around the corner are things like yesterday, for example, when a couple of reports came out that Mr. Trump and Mr. Xi Jinping from China are arguing and then trying to get negotiations done in direction to the G20 meeting in the next at the end of November. So he has reportedly asked officials to draft a possible deal, trade deal with China, and that's very important. If there is an outcome like that, you already see that markets are reacting, and already came up quite some points. If you check out the data from Dow Jones or from Nasdaq 100 or from the S&P 500, if you just check out the really jump from the Dow Jones, it already jumped in 3 days. It already jumped 1K points. So that's quite a rally, I would say. And if you just look at the German DAX, you see the blue boxes right here. We spoke about that last Friday. That move from the record high from German DAX around 13,600 down to 11,050 was a major move. Already printed that out for you guys. A major move of 18.7%. So that correction seems to be done for the first thing, just for the first move, and we already went up 500 to 600 points from that low. So today's resistances and supports and pivot point, as you can see right now here, is from the DAX. So from the German DAX, starting at 9 o'clock, not from the future DAX. So important to say when we talk about some gaps later on. So resistances, as you can see, 11,646, and if you just move that thing a little bit to the right side, we already see that we got a high of 11,653 here this morning. So that R2 resistance 2 already got touched, and if you look to the downside, pivot point at 11,487. We still have some room to retest daily lows, or just print out some new daily lows. It doesn't mean that we are skyrocketing back up again. It doesn't mean that we are only going up the next days. It could be getting still a bumpy road, just because of the fact that we don't know. We don't have glass balls as well. That we don't know anything about the outcome of that midterm elections. And that's very important for the rest of the global stock markets as well. EMAs, EMA 100 and EMA 200, as you can see here, still way up the road. We'll talk about that in a chart from the last week as well, where I printed you guys this blue box here. When we saw that that lows around last week, and spoke about a rebound move in direction to that descending trend line here and to that blue box, a possible target route, where the 61.8 level is around 12,270s. And the descending trend line comes down here, and on top of that, you got the moving average 200 here, and on top of that, from the DAX, as you can see here, you get the EMA 200 at 12,313. And the EMA 100 at 12,128. So we are in quite, let's say in that direction. We are in that area where a retouch or retest of that levels are not 100%. It's not possible to say no to that one. Would express it that way. So from that point of view, we still have 600 points to go. So still a couple of points up there. This is the possible route for a next swing trade up to the upside as well. I would say give a little bit more room. And let's say let's have a retest of that level. Xetra gap is still open at 1175. Excuse me, 575.43. So that level is a closed gap from the Xetra DAX. I'm talking about the Xetra DAX only here. All these data, as you can see, is from 10:30 CET this morning, so nothing like old stuff. Just to let you guys know. Okay, we spoke about a couple of single stocks. One of those single stock was Bayer as well. Just a little bit of 1 or 2 minutes about that. Of course, the story around Monsanto and all these, yeah, let's say, crazy things going on at the California court, and that Bayer is going to be sued for by a lot of guys using that glyphosate stuff. However the outcome may be, we still have those huge gaps. I always spoke about that stuff like the Swiss cheese chart, because there are so many holes in there and so many gaps, as you can see. But we still have the route up to the 61.8 here, the first target to the upside, which is around the 73 marker. And we still have the room to go to close that gap at the low of 76.50. So just from that quick chart technical stuff, don't want to get into much details here from the Bayer stock. Nasdaq, just closing that one here, the black horizontal lines, as you can see from the daily, or let's say even from the weekly perspective, from the last low to the record high. We got this 61.8 level, which got absolutely more than just only touched. So that, let's say, weekly crash candle here is now really a strong hammer, a strong signal for a next upside route. And if you just change that view from the weekly perspective, of course, from the last high to the last low, let's do that as well. And just widen that picture, of course. Let's see if that is possible for the daily. Just more easier to have a look on that one, so that you can see a possible target zone. And just move that blue box right now. Just minimize that one and going up the road. Why doesn't work? Just hold on a second. Now it's working. Just wanted to move that one to the 61.8 level, where there's the possible next reaction zone to the downside. I'm talking in waves. You can call it Elliott wave technologies or whatever, Elliott wave theories, but just the market is still operating in waves. There's nothing like broken. The market is not broken. And if you look at sentiment as well, that thing worked out as well 100% again and again. People got really screamed about the market situations, screaming and yelling at the descending market, at the Nasdaq 100, the S&P 500, and the Dow Jones and other markets as well. People got in trouble and said, this is a bear market. This market is about to crash. And the absolute upside happened. Like always, the same thing happens when the sentiment is extremely bearish. Suddenly a bull market or a really strong rebound is coming around the corner. Same happened here again. And when all people are screaming and yelling at the next bull move, you guys should be the way, you guys should be thinking the way to the opposite as well, and let the market run a little bit more and just try to short the market at the next overshoot as well. And this overshoot might be this blue target zone here, where we get to the downside, back down again. So just saying, of course, this is not a 100% forecast. This is just the way feeling about markets when you're trading it a couple of years. Okay. Then there is, of course, the Euro-US dollar rate. Quite a surprise. I did that via my account FX Dirk here, via the German platform Guidance. And I did another nice Kiwi call, New Zealand versus US dollar. You can see that on my Twitter channel, FX Dirk, if you like. You can follow that, and you see a couple of trades are called out. Let's just do that with a Euro-US dollar and just combine a couple of Fibonacci analysis here from the yearly high to the yearly low, which got almost touched. The yearly low was at 113.007, or let's say 113.01. And if you can see that the last low we got here from yesterday, excuse me, from the 31st of October here, was 113.018. Depends. The Forex market is nothing like a stock exchange with a building. It's just a network of thousands, 10,000s, millions of networks. So be aware that there are a couple of changes between the lows, but the low is still 113.01, 113, and it got not hit, nothing sub 113. So what happened? We got a nice rebound scenario here. We spoke about possible targets. First target was 114.98. Next target would be 116.19. Why that? The thing is, if you just combine that with another Fibonacci analysis, you will see a Fibonacci retracements from the last low to this last high here at 118.50. And surprise, surprise, you get a couple of Fibonacci retracements just exactly at these levels. So you got one target to the upside. The target to the upside is the 61.8 level right here, which is close to 115 level. And on top of that, you got a 38.2 level, which is, damn, I just hit the wrong button. Which is around the 38.2 level here at 116.19. So that's why I came up with that kind of targets. Interestingly, the last days and extremely yesterday and today, it's very interesting to see stuff about so-called expiries. Now, what is this guy talking about with expiries? The thing about expiries is just the fact that a couple of spot options expiring at the New York sessions. And yesterday, for example, we had a couple of expiries there at the Euro-US dollar and at the 114.00 handle. And let's just check out if I just find that here at my other screen. I had a 4.6 billion expiry at that handle. And just let us talk about 2 days expiries, which is more interesting for you guys possibly, because we have a couple of expiries above the level of 114.50. And if you can see that 114.40 handle right here, right now, where we are hovering around, we still have 0.636 billion of market expiry at the level of 114.50. And if you're going up the road until 115.25, for example, you still have outstanding volumes of expiry of spot options expiring, which is coming up to approximately more than 2 billion. So, of course, 2 billion sounds very, very small for the market. And for the Forex market, regarding the fact that you have a daily turnover of 1 to 1.2 to 1.3 trillion dollars a day. Yeah, we're speaking about trillions. So 1.2 to 1.3 trillions a day. So that possibly means nothing from spot expiry. You guys would say right now. The fact that the most part of the market is not only spot trading. A lot of businesses are going on with just hedging, with just typical businesses changing currencies from the one side to another side, and the rest of it is spot trading. So spot trading is something between 1.3 to 1.7 trillion a day, and if you combine that, the share of Euro-US dollar gets a little bit more smaller, of course, but it's still way up the road. But still, that's what options expiring theories and things are not 100% to be pushed to the side. They are still very interesting. And interestingly, yesterday that 114.00 handle got hit, and the next moves I would say is very close to that 114.98 handle. So that is a possible target zone, that blue box here. And interesting, I would say the same thing as I said with the DAX or with a couple of other markets. The market is going up, is scratching all these levels. And you may just be interested in watching what time is it, and watching how far the non-farm payrolls are just away regarding the time. And you might be thinking about going into that non-farm payrolls with a empty position board and thinking about preparing a short, or even preparing a pending short order around that 114.98, 115.20. Levels to the downside, just to be having something like a retest of that 114 handle again. Okay, so just saying that there's the current market situation, the current market feeling in that currency pair. Gold, one thing to go. I spoke about a possible move to the upside. Myself, I just call out a trade which got hit. The stop loss got hit. I was possibly just one day too fast to re-enter a long scenario. In that case, the position dropped out. But in the end, let's say the call was right. Only the time, like we always have the problem with a typical trading style. Sometimes it's just a time setup that misses the trade idea. That sounds very easy. Of course, that is a very important part of trading, of daily trading. Time is always something like you need to be having patience, more patience. In that case, I was just a little bit too fast. Okay, what is about happening to the next stories about gold? Let's see. Just check out this chart from the 4-hour perspective, and just check out these levels from the last high here to the last low. And of course, just delete that blue box here because right now it looks ugly. You guys see that the 61.8 level here got definitely touched, and we got a nice signal just here from the from this kind of, let's say it's getting a little bit of a bigger hammer here. And if we just move to the upside as well and have a nice target to that 100 level here, which is from the last high here from 1243.38, just a possible target zone for the bulls. Retest scenario of some kind of daily lows here, would say that we would go back to 38.2, which is around that 1,224 levels, 25 levels right here, to have a little bit more energy to take the next hit upside. So in the long-term scenario, or let's say in the next weeks to come, as I said about a couple of other markets, the outcome of midterm elections is still very, very important. And again, explained here while we are speaking about gold. In case of Democrats might get a majority in the House of Representatives, that might be getting the Trump administration in trouble, just because they are not able to do stuff like they did before, and that questions the coming month and the coming 2 years, what is going to be happening with the tax policies, economic policies, trade policies, all the stuff the Trump administration started, and that is of course questioning the outcome of the next 2 years. So it's nothing like unimportant. It's very, very important. Okay, Jens, I spoke about a couple of things. Maybe there are some questions, or maybe there's a market clients are wishing for.
Some questions I answered one-to-one in a chat from the live webinar. So the time is our limit, 24 minutes already. So tomorrow is another day. But like I say, every Friday, tomorrow is weekend. So there we have no webinar and no trading. I wish you already now to the early time in Europe nice weekend. And if you'd like to see and watch that again, in a couple of hours, it will be available in our YouTube channel. Just go to youtube.com/AdmiralMarketsFX. The next live webinar will be on Monday with Jay Medro. Jay is more for the institutional Forex view. So if you like that, just visit us on Monday to the same time. Greetings from Berlin office. Thanks. And all the time, good trades.
Yeah, thanks. Bye-bye. Have a sunny weekend right now here around Frankfurt. It's very sunny, and hopefully you guys will have that too. Enjoy your weekend, relax, and of course, don't forget NFP non-farm payrolls today at 13:30 CT. Wish you the best. Happy weekend. And if you like, see us and hear us at next Friday, 11 CT. Thank you very much. Bye-bye.